Hey, welcome back to The Dive. Today on the show, we're chatting with Zach Wilds from Celsius. But before we bring him on, I'm just going to quickly remind you to smash that subscribe button. Hey, Zach, welcome to The Dive.
Hey, thank you so much for having me.
Yeah, thanks for joining us. Okay, so for those who are new to the company, what is the high-level overview for Celsius?
Yeah, so Celsius is an amazing platform where we pay yield to all of our crypto holders inside the app, and then also offer loans against your crypto. So you can borrow instead of having to sell your coins.
Oh, wow. Okay, so crypto assets carry significant risks. What security measures does the company take to protect the safety of the transactions and the app itself?
Absolutely. So when you hold coins with us, we are holding your keys, so you do have to trust us, and we take security extremely seriously. We use multi-layers of MPC, multi-layer computation. We have a ton of in-house practices that we use to protect users' information, their funds, many wallets, and then we also use custodians that have their additional layers of security. We understand that if we were to ever lose users' funds, that's the worst case scenario. So we literally take every precaution to make sure that never happens.
So, what is the advantage of Celsius over holding your assets in a traditional wallet or an exchange?
Sure. So when you hold your Bitcoin in a cold wallet, it's pretty secure. You have to make sure you don't lose the keys there. You don't have make sure you don't lose that wallet. And if you do, you have the seed phrase. And then your coins are just there, right? They don't produce anything. With Celsius, you hold your assets on our wallet, and we're going to pay you yield every Monday. We're going to allow you to borrow against those coins, and then we're there to act as a service provider. And if you want to recover a password, or you have a death in the family, there's a place for those coins to be recovered from, instead of just on a hardware device that's really, the cash under the mattress solution.
Okay, very cool. So, what do you think the overall institutional market cap of Celsius lending will become?
The market cap for securities lending is trillions. So right now, Celsius holds about 17 billion worth of crypto, and that market again can grow magnitude. So there's no issues there on reaching the top of this. And then as crypto itself becomes larger, more and more market opportunities show themselves. So we're at 1% of 1% of where this is going to end up.
So, how does Celsius generate cash flow to pay the interest for the Cell token?
Sure. So institutions, exchanges, they all want to borrow your coins in order to provide liquidity to their business, for traders, for leveraging, for options, for all kinds of stuff. So what Celsius has done is just created a very simple place for you to hold your assets, and then we deploy them in a number of strategies. We just made a very large $200 million investment in Bitcoin mining, again, to create more yield. And so we deploy these in a very risk averse way, always protecting users' assets, taking collateral to protect loans, and then giving that revenue back to, if people want to earn Bitcoin, they earn more Bitcoin. If they want to earn ETH, more ETH. But a lot of our users choose to earn Cell token. So we just take some of that yield, divert it into the Cell token, and then pay that yield back to our users.
Okay, so you're essentially earning crypto off your crypto that you already own.
Correct. Yeah. If you love
Cool.
Bitcoin and you want more Bitcoin, you hold it with Celsius, and every week we give you more Bitcoin on your Bitcoin.
Awesome. Okay, so we have to ask, what is the impact of inflation to companies like Celsius? How does the company think about inflation in relation to managing your overall strategy?
Sure. So all of our assets are crypto, and we don't touch fiat dollars at all. So when people do experience inflation, and if that pushes assets up, all of our users are pretty much protected. We're managing that part of their crypto holdings that aren't going to be really impacted by inflation. We don't hold dollars. A lot of our users hold stable coins. And I guess those would be devalued. But if we do see a lot of inflation taking place, crypto is probably going to go up, and as more people buy it as an inflation hedge. And then that's great for our business. That's great for our users. And our users, like I said, earn more Bitcoin on their Bitcoin, they're not earning dollars, they're not earning stable coins. So that means that the Bitcoin that they earn is also now more valuable. And our users are very, very well insulated from that scenario.
So do you believe Celsius plays a role in the volatility of the cryptocurrency market?
Actually, we're actively against it. All of our users are long-term holders, so they hold their coins in our wallet. Then those coins get deployed, short-term market things, but this large base of assets is not trading day to day, so they're not contributing to these large swings that we've seen. I've been a holder at 60,000. I'm a holder at 29,000. That doesn't really matter because every Monday I'm getting more Bitcoin on my Bitcoin, and I believe long term it's going to be much, much higher. So it's really disincentivizing me to try to make these swings and then just hold, collect that yield every week and grow for the next 5 or 10 years.
Okay, yeah, makes sense. So lastly, do you care to offer a price prediction for the end of the year for Bitcoin?
I agree with our CEO, Alex Mashinsky. I think we're going to get to the $140,000, $160,000 range by the end of this year.
Wow, crazy. All right, well, thank you so much for joining us on the dive today, Zach.
I appreciate it. Thank you so much.
Thanks so much for tuning in today. We'll be back again tomorrow, so be sure to turn that notification bell on.